All right. Welcome to Coffee with Marcus and Mark, the number one stock market show on Spotify and one of the most popular market updates on YouTube. In this show, we talk about what's happening in the markets and how we are trading them. Today is Friday, July 19th. The S&P looking at its worst week in 3 months. The Dow plunged yesterday down 500 points and is looking at snapping or actually snapped a 6-day winning streak. Crowdstrike is hammered after a huge IT outage. Netflix on the move after earnings, and Amazon makes a Prime Day record. Plus, we'll take a look at our open positions. As you can see, there's a lot to talk about, so let's go ahead and get started. And if this is your first time here, my name is Mark Hodge. I'm head coach at Rockwell Trading, and today it's just going to be coffee with Mark, but Marcus should be back with me on Monday. So let's go ahead and take a look at what's going on in the markets. And here we have the S&P 500. And we're looking at a daily chart. And it's been a bit of a rocky week here. We see that we were slightly higher on Monday and then a bit of a rally on Tuesday, making new records. On Wednesday, we gapped down. And Thursday, a decent sell-off. Today, right now, slightly lower for the trading session. If we look at a weekly chart here, we see that the S&P is looking to snap this 2-week win streak. There was a little bit of a loss towards the end of June here after 3 consecutive winning weeks, a small down week, and then 2 consecutive winning weeks. But this is a little bit bigger, a bigger dip, down 1.4%. We haven't seen a loss like that since April. Now, looking at the Dow actually rallying for part of the week when the S&P was struggling a little bit. We talked about that sector rotation. The Dow blue chips getting some love, and also that move into small caps. But yesterday, the Dow was down, just like the overall market. The Dow dropped 533 points, was down 1.3%. Today, actually leading the way between the S&P, Dow, and NASDAQ, down 0.75% right now. And it looked like the Dow was going to finish the week positive and finish with its 3rd consecutive winning week. Right now, that is still the case, but giving up a lot of those gains during the week that we saw earlier. Still positive for the week, up 0.9%. And it would take a pretty decent move to erase the weekly gains. But today, a little bit rough. We'll see where we end the day up. Taking a look at the NASDAQ and what's happened this week, similar to the S&P. Small update on Monday. And then Tuesday, just kind of flat. Still finished higher. And then Wednesday was a big loss, just like the S&P, but the NASDAQ leading the way lower on Wednesday, down 2.8%. Yesterday, down 0.7%. Today, right now, flat, just kind of hanging in there. But if we look at a weekly chart, we see that the NASDAQ down almost 3% for the week, and a pretty decent slide, just like the S&P 500. We haven't seen a drop like this since mid-April when we had that bigger pullback. So an interesting week all in all, a lot going on. We could take a look at IWM and look at small caps here because that has been the theme of the week, this rotation after this huge run up that started last week. And the IWM, the Russell 2000, down 1.9% yesterday, down 0.6% today. So just overall, a bit of a dip in the market. We could look at the heat map in PowerX Optimizer, and we see here that there's a lot of red in the S&P 500. Sure, there are a couple of names that are green, but it looks like a broad market pullback, maybe some profit taking going into the weekend. And we are seeing that volatility is spiking a little bit. So if we look at the VIX here, the VIX, up 16.6. Interesting. This is probably just a bad tick and weird print there. But the VIX breaking outside of this range and higher for the last 4 days. This would be the 5th day if this continues. right now up 1.4% and trading above 16. So here, the volatility index showing that there is more volatility expected based on S&P 500 option premium. And now that's a good thing for option selling. So could lead to some more wheel trades. We like to see that volatility when we're selling puts and also selling calls. And at least for now, the VIX is higher and at levels that we haven't seen since April. So interesting. The pullback we haven't seen since April, the VIX at highs that we haven't seen since April, and some definite headlines here. A lot of activity based on earnings. So let's take a look at the earnings calendar. And we see here that we did have some major companies reporting this morning. We had American Express, Schlumberger, the Travelers, Halliburton. Yesterday, we had Netflix, and we could take a look at Netflix and see what's going on, because Netflix reported earnings right now up 1%. They actually gapped higher and rallied early on, got up to 680, pulling back a little bit, but still higher for the trading session. Now, Netflix reported better than expected earnings and also better than expected revenue. They did issue some third quarter guidance that was a bit lower than expected. And we know that the focus is going to be on the actual earnings per share reading and revenue, so top and bottom numbers, and also guidance. And there's a big impact or focus on guidance. However, I saw that it's not unusual for Netflix to actually give a revenue forecast that is a little bit on the conservative side. So over the last 4 quarters, they've actually beat or reported inline revenue. And it seems like traders have noticed that trend with Netflix, because you would think that guidance for revenue that was lower than expected could be negative for the stock, especially when the overall market's down a little bit. But with Netflix being higher, it seems like traders have kind of recognized that as a theme or pattern when it comes to Netflix and the guidance that they offer. Now we have to look at let's get away from earnings for a minute. We have to look at Crowdstrike here, because this is big news. Look at Crowdstrike, down 8.5%. This was a lot worse this morning here based on yesterday's close and where we opened, down 14%. This comes after a huge IT outage that was caused by Crowdstrike and an update that they made. So not good news for CRWD. And here we can look at this. This is a Reuters update here that dropping to a 2-month low. They said they had deployed a fix for an issue that triggered a major tech outage that affected industries ranging from airlines to banking to healthcare worldwide. A software update by CRWD appeared to have triggered a worldwide tech outage that crippled industries, and just not what you want to deal with when you wake up on a Friday. But that led to some issues with airlines. I saw that globally there were approximately 3,600 flights canceled. Domestically in the US, 1,400 flights canceled. That's about 11% of the flights that were out there because of this outage, and all tied to CRWD. Now, it could be that this move here was actually an overreaction. It gets resolved, but rough day for CRWD and still down more than 8%. Let's go back to earnings. Let's take a look at a few more. Let's look at AXP. So American Express reporting earnings today, and American Express did report better than expected earnings, but worse than expected revenue. So they did miss on revenue, and yeah, it looks like traders are maybe taking some profits or making an adjustment to their portfolio based on that information. American Express down 4%, but that really just erases the 40 gains that we saw in AXP recently. Let's take a look at Comerica. This was another company reporting earnings and taking a bigger hit, down 12.3% here. Comerica reported better than expected earnings. They also reported better than expected revenue, but they said that their net interest income, they came in above expectations, but lower than a year ago. And the bank said that high rates are pressuring deposits, and it saw weaker loan volume. So all in all things considered, investors not liking that, and Comerica taking a 12% hit, down just like American Express, but definitely a bigger move lower here, over 12%. Now we could take a look at our open positions, and if you want to see what we're doing, please give the video a like. We'll also talk a little bit about earnings just a little more, because Halliburton reported earnings, and Halliburton down 5% here. They actually reported better than expected earnings per share, but they did miss on revenue. So after this nice 5-day rally, 6-day rally, pulling back a little bit. Now, interesting for us, so I don't mind this after that big run up, because I sold the 3450 and I sold the 36 calls. So both Marcus and I, we were assigned at 3450, and we decided that we wanted to sell half of our calls at our cost basis, and we wanted to sell the other half of calls against our position at a higher strike. So he went with the 3650, Marcus went with 3650, I went with 36. And midweek, we were above the strike that I sold. And for me, it was a nice little buffer here in case there was a negative reactions to earnings. And as far as I'm concerned, this is working out very nicely, because the 36 calls for me, I'm just going to let those expire worthless. Right now, the 3450s are at the money. And we could actually take a look real quick and see what a roll looks like here, because I am either going, if I don't roll, then that means the stock and where it closes at the end of the day will determine if I am still in a full position or if half of my shares are called away. And I don't mind being in Halliburton a little bit longer. I think that this move right back into this range and right where I own shares, it makes for a nice wheel play. That's exactly what we're trading here. So let's go ahead and let's see what the possibilities are. So if Halliburton closes below 3450, then my 3450s expire worthless and I'm in a full position. If Halliburton closes above 3450 and I don't do anything, then half of my shares are called away. I still have half of those shares that I could sell calls on next week, and I might consider another entry at 3450, sell puts again at 3450, or at a lower level. I'd have to see where we're trading on Monday, but there are different options that I have available to me based on where we're trading right now. The third scenario is rolling, and that would be continuing the trade by buying back my 3450 calls and selling the 3450 calls next week. Right now, it looks like 39 cents, maybe 40 cents would be the credit there. If I plug this into the calculator, 39 cents gives me 51% annualized. That's not too bad. As a rule, Marcus and I, we try to shoot for 60%, right? Because at 60%, we're getting a lot of premium there by rolling. If we just let it go and we get called away, then we might be able to sell puts at a lower price that actually improves our cost basis on the trade. So that's kind of the incentive to getting a little bit more on the roll, because you're basically justifying staying in the trade for another week versus the potential of getting called away and then getting in at a better price. But this credit's pretty decent. And I'm just seeing here right now the 3450s expiring today. It looks like we have a bid of 35, an offer of 39. So we split that, and that's 37 cents. Right now, Halliburton's trading at 34. 76. So that's 26 cents in the money. So that means that there's 11 cents of time value still in the 34.50 expiring today. That's a lot of time value for an option that is expiring in a couple of hours. And if we lose that time value, which is going to happen here, then it could be that we actually get closer to 45 cents, right? Because if 11 cents is time value right now, that's going to disappear. If we don't make too big of a move and we don't rally significantly or drop significantly, but if we stay a little bit above 34.50 or around 34.50 as we get to the close, then it might be possible to roll and get that 60%. So I'm not going to make that decision right now, but this is definitely something I'm going to keep an eye on. That's some decent premium for a roll. And as far as I'm concerned, sure, we've dropped on earnings, but this is working out perfectly based on our assignment price and where we decided to get into how. So looks like we're going to stay in this one at a minimum on half of our position, but potentially a full position or rolling and staying with a full position based on that pullback after earnings, which works for me. Taking a look at the other wheel trades that we are in, CSIQ has had a very interesting week, back and forth, up and down, and everything in between. Yesterday, breaking through this recent range and then finishing slightly higher with a 1.2% gain, which is nothing for CSIQ. CSIQ is just all over the place. It could be down 11%, up 9%, down 1.5%. This thing just tends to move. Today, down almost 4%, pulling back, getting towards 16. Nothing to do with this one right now. I would love for us to start attacking the upper range here and then break to the upside with this 21 level, the next possible resistance, rather than pulling back. But right now, just sitting tight and waiting. UPS, another interesting one. After this huge rally, we pulled back yesterday with the broad market, down 1.8% yesterday, down a little today, 0.8% here. Nothing for me to do. Right now, we're outside of the call selling range that I would want to be at, but we're still hanging in here, and we'll see what happens here today, and also keeping an eye on earnings, which is set for next week on Tuesday. So hopefully a nice earnings surprise there for UPS. Hopefully some nice stock buyback to help UPS move higher as well. And following what FedEx did, I would love that, and would love to see UPS just take off to the upside. So that's what's happening with our wheel trade. Let's go ahead and take a look at WTFs. And WTF, we have no new signals. We have no exits for today. We have 6 open trades, and both Marcus and I traded AMAT. AMAT pulling back a little bit after the original entry. Nothing to do right now with this one. We are waiting for an exit signal, and the stop loss is pretty far away, so no real threat there. We'll see where this one goes. AMD also pulling back a little bit after that original entry signal. Same thing. Looks like it's finding some support at this 200-day moving average. Nothing to do right now. The stop loss is far away, waiting for an exit signal. Amazon pulling back a little bit yesterday, but today slightly higher. And actually, let's go over here. Let's go back to TradingView and take a peek here, because Amazon, some things here. So Amazon finished their Prime Day event, and they set new record sales, making it the largest event of its kind to date. So the 2-day event witnessed the sale of more items than any previous Prime Day. Independent sellers played a significant role, with over 200 million items sold. So, hey, it looks like it was a successful Prime Day, and Amazon's up 0.3%. Let's see this continue. Let's see this go. And this is one that actually Marcus and we did not take this. It's a valid entry. I was looking at it as a possible pullback entry. So we have this open below entry list. And at the open, based on yesterday's close, Amazon was down 3% from the original entry signal. So this list here, when we're looking at our WTF scanner, this is a nice way to pick up some pullback entries that actually do pretty well performance-wise. So this is one that I'm not in yet, but definitely something on my radar. Going back here to the list, we did trade AVGO. So both Marcus and I took this one up a little bit yesterday. Today, a little bit flat, trading right around where we finished yesterday. So this one working out, no exit signal yet. We passed on CEG. CEG, a little bit quiet. This is one where I'm considering it, but I'd like to see it pull back just a little bit more, and maybe it pops up on this OBE list on Monday. And maybe there's a little more of a pullback, something to consider. But right now, trading just slightly below the entry signal. And then there's Schwab. Schwab got into this one, and we haven't hit our stop loss yet, but Schwab has definitely been a tricky one. If we look at the 6 on the list here, Schwab has been a little difficult there. Still in it, no stop out, waiting for an exit signal. We'll see where this goes. So with the overall market, it generated some nice WTF signals, but now we're looking for some of that follow through. And at least for today, it does look like we're going to have a quieter, maybe a slightly down day. And that could lead to a little continuation of this drop here. Then hoping for a nice week next week, some buying opportunities out there after this recent pullback that could send these WTF trades higher. We could look at the economic calendar, see what's in store for next week. And we see that on Monday, there's nothing going on. On Tuesday, there really isn't anything going on. Wednesday, we have flash manufacturing PMI and flash services as a red flag report. On Thursday, we have advanced GDP. We have unemployment claims as red flag reports. And then Friday, core PCE price index. So more inflation data. That's going to be a biggie. So Friday next week and Thursday, definitely some things that could potentially move the market. We could also look at our earnings calendar, and we see that with next week, there are 144 notable stocks compared to the 46. That's not everybody that's reporting earnings, but these are just the bigger players based on our algorithm here. So 144. Then we see that the week after that, that was this week, 144 this week. My apologies. So next week, 492 notables. That gets really busy for earnings season. And the week after that, 736. So that's pretty huge. And if we just take a quick peek here, go over to next week, we see that on Monday, we have Verizon before the bell. On Tuesday, we have Coca-Cola before the bell, Philip Morris, Comcast, UPS. After the bell, we have Alphabet, Visa, Tesla. On Wednesday, we have Boston Scientific, NextEra Energy, IBM after the bell, Chipotle after the bell. On Thursday, we have Union Pacific, Honeywell. On Friday, we have Bristol Myers, 3M. So a lot going on. I know that there's a lot of interest in Tesla right now. So Tesla reporting after the bell and Google reporting after the bell next week. That just in summary shows that we have a busy week with earnings. And towards the end of the week, we have a very active economic calendar. So with that said, I know some of you come for the trading commentary and stay for the jokes, and I apologize to those of you who stay for the jokes, but hey, we might as well keep this trend going. And I'm just curious, did you hear about the guy who was addicted to drinking brake fluid? Gosh, it sounds awful. I know it was a huge problem, but he could stop at any time. I'm sorry. I apologize for that one. Like I said, sometimes when Marcus is here, we're trying to prepare to do jokes together. There's just a little more incentive to come up with some good ones. Yeah, he could stop at any time. Brake fluid, stop. Yeah. With that said, I hope you had a wonderful trading week. Hope you have a wonderful weekend. If you like the video, please give it a thumbs up. Please give it a like. If you are new to the channel, please subscribe. And we look forward to sharing more commentary, talking markets with you. As you probably know by now, we love to trade and we love talking trading. And that's what this show is all about. So have a great weekend. Until Monday. Happy trading, everybody.